Yeah, well, Conrad is a gas company, and our business is really exploring and developing natural gas in the Asia Pac area. We made a big discovery, the Mako Gas Field, in 2017, and obviously we're transitioning from a private company to a public company and accessing public funds to progress the development of Mako and some of our other gas assets in the region. We're raising up to 55 million Australian dollars, and that'll see us through the front-end engineering, ordering long lead items, and really progressing the Mako project, as well as continuing to evaluate some of the other areas that we've got in our portfolio. The Asia gas demand story is the strongest gas demand story in the world. Obviously, energy security in Asia is extremely important. And so what we're doing in the macro environment for gas globally is great, but it's particularly strong in Asia. I mean, Asia will overtake Europe as the biggest gas consumption region in the world. So we're really trying to position Conrad in that particular market. The macro environment, I mean, I've been in the business 40 years and it's never been as good as this. I mean, we've got sort of high prices, and now we've got this transition sort of going from sort of coal into natural gas and ultimately into renewables. Gas is being classed as sort of green, particularly in certain parts of the world. And obviously, these developing countries are trying to transition away from coal to natural gas. So we're really trying to position Conrad as a gas producer in those emerging markets to help the transition from sort of particularly from coal into natural gas. Yeah, the Mako Gas Field, we discovered the Mako Gas Field ourselves in 2017. And that was really the launch of sort of Conrad. I mean, Conrad's been going for about 10 years and we've basically been exploring, but then we made this major discovery in 2017. After we discovered it, we then went into an appraisal and delineation program, which we completed in about 2020. The field itself ended up being twice the size that we originally expected. So we're really delighted with the result. The field, Nick, is in a great location. It's in the Natuna Sea, which is pretty much on the border between Indonesia and Malaysia, and further south we have Singapore. In the Natuna Sea, you've got billions of dollars of existing infrastructure that connects pipelines into Singapore and Malaysia and ultimately into Indonesia. So if you had to find gas in a better location, you couldn't. It's just a fantastic location to find the gas. Currently, it's the largest undeveloped field. It's in shallow water and a very shallow reservoir. So it's a very simple low-cost development that generates a very high internal rate of return. In the first 5 years, when we've commenced production, we'll be generating close to $1 billion of net cash flow just from that field in the first 5 years. So it's a really good underpinning asset for the company going forward. Well, the upside's significant and that's purely a function of the way the deal is being structured. The pre-IPO valuation of the company is around $130 million US. That's a pre-money valuation. The independent expert report on the current asset basis, just on Mako alone, is about $442 million. So, excuse me, that's a 3 times uplift, leading into the theoretical value of Mako alone. The IPO is being priced just on Mako, so there's no value for any of the other assets. The other upside for the company is our other areas. We've got this offshore Mangalahat exploratory permit, which is offshore from where potentially Indonesia's next major capital will be. So we've got some really good exploration opportunities. And the last one is what we call the joint study areas. And Nick, these are really significant. We've got 2 what we call joint study areas. They cover about 20,000 square kilometres. They contain existing discoveries and a tremendous amount of exploration potential. So what will happen over the next 3 to 6 months, we're hoping that they will be converted from joint study areas to production sharing contracts, and then we can start rolling out announcements about the potential of the areas and the resources, etc. So yeah, there's a lot of upside in our view with the portfolio. Yeah, we've got a very experienced board and management team. We've got a team of people in Jakarta, which is effectively our operations team. The board, Peter Botton's our chairman. Peter was the ex-CEO of Oil Search. Oil Search, as you well know, is one of the most successful oil and gas companies in Australia. Peter's just retired as chairman of AGL. Peter brings an enormous amount of experience in the gas business and also in developing gas fields in emerging markets such as Indonesia and what he did in Papua New Guinea. Peter's been a tremendous addition to our board. Miltos Zenegelas, he's our CEO, Managing Director. Miltos has got a tremendous track record in exploration. He's been very, very successful in finding oil and gas fields across the Asia Pac area. Dave Johnson's another one of our executive directors, and Dave's got a lot of experience in developing oil and gas fields, again, in the Asia Pac area. He's ex-Shell, ex-Woodside and ex-Mubadala. The three non-executive directors, Paul Bernard, ex-partner at Goldman Sachs, ex-top-rated energy analyst across Asia Pac, very well connected in the region and certainly has a deep understanding of the energy business. Jeremy Brest, once again, ex-Credit Suisse, First Boston, really strong in the structured finance and the finance side of the business. And then as myself, started my career with Woodside, later worked at Merrill Lynch in Singapore for 10 years. I was head of their Asia Pacific Energy Research team, and more recently stepped out of that and got involved in projects such as Conrad, where I'm I said I'm a non-executive director and one of the founders of the company alongside Miltos. Yeah, well, 70% of those funds are going to go straight into the projects. A bulk of it's going into the Mako, what we call the FEED, the front-end engineering and design work, and ordering long lead items for the development of the gas. So that's a big component. That's close to 60% of the IPO proceeds. The other is really to do with seismic and some of the new areas, such as the joint study areas, where we're continuing to do evaluations on that particular region. Yeah, well, there's a lot actually. One is the opportunity is unique in that there's no listed pure upstream gas-focused company in the Asia Pac area. So we've got a unique company that's developing a business in probably the best macro conditions that we've ever seen in that particular business. We've got a great project, which is what we call the launch project, which is the development of Mako Field, and with the conversion of the joint study areas to PSCs, we've potentially got 2 or 3 other projects that will slot into the back of it. So we've got a lot of projects sort of sitting in the background that we hope to roll out over the course of the next few years and build Conrad into this unique company. I'm a big believer in product differentiation, and I think if we can create a pure offshore gas-focused company in Asia in what is the best energy business in the world, gas in Asia, I think we can attract a premium rating for the stock and hopefully make our shareholders a lot of money in the process.